You make your first profitable trade, and suddenly your brain starts doing dangerous math. If I can turn $500 into $1,000 this quickly, what happens when I start trading with $10,000? A few days later, your portfolio is up again. You're checking your phone every 10 minutes, and for the first time in years, money feels easy. You stop thinking about paying bills and start thinking about quitting your job. Maybe this is the shortcut everyone else missed. That was me. And honestly, I really believed I had figured out the game. My name is Nins, and I spent way too much time thinking about money psychology and how people build wealth. If you're someone who feels like you're one big win away from financial freedom, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Here's the thing. I didn't make money because I was smart. I made money because everything was going up. And during a bull market, those two things can feel exactly the same. I started with a small account and watched it grow faster than any savings account ever could. $500 became $1,000. $1,000 became $2,000. $2,000 became nearly $5,000. Every green candle felt like proof that I had finally escaped being average with money. Look, when your account doubles in a month, it's very hard not to believe you're special. So naturally, I started increasing my trade sizes. Why make $50 when I could make $500? Here's what most people don't realize. Making money can sometimes make you worse at managing money. Because profits create confidence, and confidence often creates bad decisions. Studies from brokerage firms consistently show that most active traders underperform simple long-term investing strategies over time. Yet millions of people believe they'll be the exception, including me. This is where it gets really interesting. The biggest danger wasn't losing money. It was becoming overconfident. Winning trades started changing my behavior. I checked charts while eating, working, and even before sleeping. Every notification felt exciting. Every price movement felt important. Trading stopped feeling like investing and started feeling like entertainment. Psychologists call this variable reward behavior. It's the same mechanism that makes casinos and slot machines addictive. You never know when the next big win is coming, so your brain keeps chasing it. Now, you might be thinking, maybe you just weren't disciplined enough. Maybe that's true. But discipline becomes incredibly difficult when you're being rewarded for risky behavior. Imagine winning 3 coin flips in a row and suddenly believing you're talented at flipping coins. That's basically what happened to me. I confused luck with skill. Then the market changed. One trade went against me. No problem. Markets move up and down all the time. Then another trade lost money. Then another. Instead of cutting my losses, I held on because I was convinced the market would come back. After all, it had always come back before. This behavior has a name: loss aversion. Research shows losing $100 feels roughly twice as painful as gaining $100 feels good. So instead of accepting a small loss, people often hold positions and hope. Hope is not an investment strategy. Eventually, the losses became too large to ignore. Months of gains disappeared in days. The account that made me feel invincible suddenly made me feel stupid. But the money wasn't actually the painful part. The painful part was realizing that I wasn't the genius trader I thought I was. My ego had become attached to my portfolio balance, and when the portfolio crashed, my confidence crashed with it. That experience completely changed how I think about wealth, because real wealth isn't built from one massive win. It's built from systems that work for decades. Let's do some quick math. Investing $500 every month with a 10% annual return grows to over $340,000 after 20 years. No leverage, no panic, no staring at charts until 2 in the morning. Just consistency and time doing the heavy lifting. Boring? Absolutely. Effective? Extremely. I still believe crypto has a place in a portfolio, but I no longer believe trading is my path to financial freedom. Today, I invest regularly, manage risk aggressively, and only speculate with money I can afford to lose completely. I thought I made it with crypto trading. I failed. But that failure taught me so